All right, going live.
This is Market Week Live for October 18th, 2024. Information and support for traders and investors. Welcome, everybody. The room is getting nice and full, and hopefully there's lots of people out there on YouTube, on our askSlim team channel. So great for all of you that are attending the show today. This is just the legal stuff, and it says that what we present to you is for entertainment and educational purposes only, not investment advice. No matter how we present it to you, oral or in videos or live or any way that we do it this way, it's so that you could possibly use it in discussions with your investment advisors. We always encourage you to look at your own trading plan and also talk to your investment advisors before making trading decisions. And you can get our complete terms, disclaimers, full legal information at askSlim.com. Today's hosts, well, we have the whole team here. I'm Steve Miller, known as Slim. My badge on the floor 50 years ago, SLM, and that's how I got named Slim. And since then, everybody's called me Slim, including my grandkids. Matt's been, we've been together for a couple of decades, Arvi almost that long, and Katie, the newest member in the team, but fantastic work that she does. And you can learn all about us at askSlim.com, about askSlim, and you can see our interviews on there, which I think are pretty interesting, and you learn more about us there. Here's the contact information. If you have membership issues, website issues, and you want to know anything about your own membership conditions, you can write to team at askSlim.com. For anything on our content, information on education or analysis, first-time specials and upgrades, write to Matt at askSlim.com. In this show, I'm going to bring you my opening comments on the market, and the hosts are going to then bring you trade planning with the askSlim team, where each of us share a trade idea independently from each other, where we all do our own work and show you our total approach to trade planning of that particular symbol using our very unique analytical style. Matt is going to bring you a review of our services and see the amazing depth of what we bring. And there's a fantastic offer for new members or free members that we're going to show you today that you're going to be able to learn so much more about us. We'll do our express round where we're going to take take your questions, whether they be on our services, trade planning, chart analysis, trading issues, even emotional issues. If you have them, you can bring them to me because I've been a coach and certified in emotional intelligence now for better than 20 years. So glad to help you in that way also. So the floor will be yours. And then I'm going to bring you my stock market analysis on SPY, multiple time frame analysis. I'll probably also look at the VIX, and I'm going to show you a little different way to look at charts that I think will be helpful, especially for those of you that are looking for a market pullback, as many of us are, in a little better way that you can see that. So I'll show you something a little bit different that actually comes out of our workshop, the psychoanalysis workshop that I'm just going to bring back. For those of you that are members, that is in module 17, what I'm going to show today. So you'll see that. How to watch the show? Well, premium members, you get sent a link and you participate in the Q&A. So those of you that are here right now in the room, you can put up your questions in the Q&A. And free and non-members, you're watching it on YouTube, but we do encourage you to become a level 1 member with the special we're going to bring, and then you'll be invited to the next live show that we do in a couple of weeks. So please do consider that. You can get acquainted by taking that level 1 special. If you're watching on YouTube, please do subscribe to the channel. Click the notification bell. You know when we put up videos, and do like this video. That helps us with the Google algorithms. And on X, follow us at askSlim. Any questions you have, write to Matt at askSlim.com. All right, my opening commentary on the market. The market, as we all know, continued to show strength this week, as now it's been 8 out of 9 weeks that the market has moved to the upside since that yen panic and the inverse carry trade, where we saw a lot of selling come into the market and then a quick upside reversal. So 8 of 9 weeks have been up since then, super strong. Semiconductors, AI, they really seem to call the direction of the market each day this week. And what was mixed action for that group. What was clear last week is that it didn't matter much what the techs did, because small caps were strong, and we saw solid breadth on a lot of those days, even when there was pullbacks in the market. And when techs fell, the money really went into the Russell, as we saw, and we saw even on the worst day of the week, breadth was still decent for the stock market. Tuesday, it was ASML that fell 16%, and they warned on lagging demand for chips. And of course, we know, and I'll say more about this, that the chips are often a commodity, and that can affect markets in a significant way. So advanced decline on that day, that the ASML was down 16%, and we saw semiconductors fall very hard. We still saw advanced declines, which were strong all day, end up just a little bit to the plus side, and the Russell also a little bit to the plus side. As the week progressed, good earnings seemed to mean less. As Thursday, we saw TSM, Taiwan Semiconductor, with big earnings and benefiting again from AI, but the S&P 500 couldn't make any upside ground that it could hold. And here on Friday, the stock market is holding to the upside, but it seems to really be hesitating and not able to really make any big gains after the opening. And that was on Netflix, which is up about 10%, as it had good earnings and what appeared to be solid growth. And analysts have upgraded that stock pretty significantly right now. One thing I want to say about Netflix, and they're talking again about raising their prices, and that's because they're really performing well against Disney and other streaming companies right now. But we've seen in the past, when these prices get raised to a point where it starts to bother people, the stock got hit very, very hard. So be concerned with that. A price increase may actually be negative for Netflix. Is counterintuitive to what people may be thinking. At the same time, here, American Express, they warned, and the stock is down significantly today, and they're warning on the consumer. And of course, we know the consumer is about 70% of the economy. So there are signs that the economy is starting to falter, and that's actually greatly affecting the price of oil, as we see. So the stocks are modestly higher here, but still below the peak that the market made earlier in the week. The stock market, well, I've shown for weeks, valuations are at extreme and the risks are high. But investors have shown they don't care, and they keep buying the market. And even though some days the advance is based on just a few stocks going up in the AI, still the market continues to show solid strength. That's always the dynamic, though, at extremes, and there's always the group that carries it. I traded in the 70s. Yes, I was trading in the 70s. A lot of you watching me, well, your parents might have been kids in the 70s. So, yeah, I've been around a long time. And I remember trading the Nifty 50 stocks back in the 70s. You know, Polaroid, Xerox, Avon, those stocks that were really hot and driving the market to the upside and eventually went to zero. So we saw the same thing happen during the dot-com period, and in the late 90s, 2000, and then the NASDAQ eventually lost about 80% of its value as dot-com became dot-bomb, and the market came apart then. Well, you know, you could say that this is a different time because AI is life-changing. And believe me, I use it every single day. I love Gemini. Google Gemini is amazing, and so I'm always on there. But what's going to happen is that eventually there'll be plenty of supply of the chips and prices will collapse. That's what will happen. Prices for the chips for AI will collapse. There'll be plenty of them around, and then prices of those stocks that are pricing in decades of huge earnings will move down very sharply. So investors right now, they're complacent now on these valuations because they can make up that either AI will last a long period of time, or that no matter who gets elected in this coming election, it's still going to be inflationary, and inflation is good for stocks because that means that the companies can raise prices and that the earnings then will eventually help carry these valuations. Well, we never see that happen, actually. And what happens is that as inflation comes and the Fed has to raise interest rates again, which I believe will happen down the road, then the market significantly weakens. So right now, we can see that investors don't care, and as I have seen over and over again in all of these more than 5 decades that I've traded, eventually that complacency becomes despair. And I think we'll see that many times in coming years. But in the meantime, they're going to hold up as long as they want to. And as long as they want to, our indicators will stay positive because that's how they're built. And they're positive right now. And I'll show you that as we get into the rest of the show. Stocks, well, this is their 6th week in a row of moving to the upside. As the S&P 500, NASDAQ, DJI, they're all up fractionally right now, but the Russell's up over 2% on the week as those small caps have done better. The bond market up small, yields, 10-year yields are down small, not a lot of change on the week. The gold market, gold's up $55 right now, silver up $1 on the week. That's a big gain, and it's all on Friday. Silver's up about $1 right now. At the same time, the dollar is moving up again. It moves up about 0.5%, and our analysis shows the dollar is still staying strong into mid-November, and then a really risky period coming for the dollar after that. Now, what's really interesting is that we have strong dollar as really, I think, a safety bid that's coming in as it rebounds, and gold and silver, the metals, stronger at the same time. That's an unusual condition, and that is not normally how they would correlate. And I think that eventually we're going to get into condition where the inverse correlation between the dollar and the metals comes back. In the meantime, the oil market plunges. It's down $7 on the week, and our analysis showed that this was a period of risk in the oil market, and it was really following it perfectly. The bounce got up into a resistance, and the reason that the oil market went up so much is because of the Middle East tensions and what was thought would be an attack on Iran oil facilities. The chances of that seem to be less, or at least investors think so, because Russia came out and warned Israel, you better not do that. The U.S. is telling Israel, don't do that. But Israel do what they think is right to protect those people. So we'll see what happens. In the meantime, oil is following the patterns beautifully as it moves to the downside. That's my opening commentary on the week. Hope you found that interesting. And now let's move on. This is trade planning with the askSlim team. From analysis to the trade idea. And I'm going to look at Google as a short with a short-term outlook. Katie's going to look at KRE long and an intermediate term outlook. So I'm looking at, in the area of 1 to 3 weeks. Katie's looking for a longer period out there. Ivy's got a short-term short in Occidental Petroleum, and Matt has a long in Wynn, WYNN. That one I'm really interested in seeing, Matt, because Wynn follows the Chinese stock so much because of Macau. And so it's going to be interesting to see that because you have it as bullish. I think Chinese stocks which pulled back are bullish, and China came out and said today, overnight, that they're putting a big fund together, something like $118 billion to buy Chinese stocks. I think that's going to support the work that you're going to show, Matt. So I'm really curious to see that going forward. All right, so I'm going to start out by looking at not that chart. I want to start out by looking at this right over here. We'll come back to that. And this is our market condition monitor. So I have this now. You can see that I have Google in there right there. And what I want to do is I want to look at really the trade setup condition and make sure that that really supports what I'm looking at, because you can see here I'm looking at short term. This MCM is set to trader style right there, so you can pick the style that you want to look at or the style that you are. So I'm looking at short term, near term, really the next number of days. And if I go to the near term here, you can see also the conditions are bearish in here, as it looks at these combined algorithms using our momentum conditions in those indicators. So near term is bearish, and the trade setup here for the short term is bearish. So I wanted to look at that first before I got to looking at the chart. So I'm going to switch over here. We'll come back to that SPY in just a little bit. And here is the Google chart. So let's just analyze the cyclical patterns as we see them in here. So what's happening is that the cyclical pattern is negative. Now, why do I say that? Well, Avi's work is on here, so I can tell you what he's showing in here, and that is the cycle of translations and configurations have been super bullish. When you have long rallies, it only leaves a little time for a decline. Same thing here. And what happened on this one is that it only rallied up into the left side of this cycle and then came down in the minor cycle and broke that low right there. What that sets up is a failure. In other words, this minor cycle should rally, which it did, but then fail in the resistance zone, which you see it stalling. While the market's making all-time highs, you can see that Google has got a different story here. And of course, Google is under attack by the government, which wants to break it up. So that might be a factor in here. But what we see is momentum positive. But while the momentum is positive, it can only get up to that resistance area. When this cycle completes in this period right over here, I'm just going to grab this right here. It should essentially be that arrow right there for just the minor cycle will join up with the dominant cycle, as you see right there, into this period of risk, as we call it right there. So that's the reason why we have the projection to the downside, even though we have stronger momentum. And also we have conditions such that they're not as good on the shorter term. And that's why the MCM is giving us the readings that it is, the trade condition is bearish. So that's the daily. Now that's the weekly. Now let's look at the daily in here, and we can see here the momentum in here is still strong, and we're getting these readings right over here that this is positive on the short term. So when the sum of all of the evidence in Google is giving us a different reading, and it's telling us that be careful. And you can see in here the slim ribbon moving sideways and about to cross over. So the intraday information that we're getting from there is telling us that this is about to move to the downside. Here's your supports right over here. So we're going to project that Google's going to move down. And while the projection is down here to either this area here, 158, or this area here, about 152, I think it could test this low here at about 147. Now, if we look at the timing in here, this projects out to December, early part of December. This right over here is the end of October. So the next cycle right over here takes you out into mid to late December. That actually might really be telling us the story. And what might happen is that this cycle stays positive. You then get another rally in here, which would then be predicted. And then after that, it begins to decline out into December, something like that. So if this stays solid in here, then it could actually be out into the December cycle in here, where it goes to the downside. We don't really know which one of those is going to be the one that has the bigger break, but I'm just going to duplicate that, and it's either that one or this one over here, which would then take you down into that December period. That's what we're looking for. It's just a matter of how this daily sets up, and when this rolls over and turns red, and this turns red, we'll really have a good sense that the conditions were such that it could decline in a significant way. So right now, if I were anticipating this based on what I'm seeing, I would be just taking my minimal short position in here because we don't quite have all of the indicators yet that it's ready to move sharply to the downside, but the cyclical patterns and our market condition monitor are warning us that that is about to happen. So I would say small short now, get ready to add to it when the conditions tell us such. That is my analysis on Google, and I'm going to hand this over to Katie.
All right, let me share my screen. And let me know when you can see KRE.
Got it?
All right, great. So this is the weekly chart of KRE, which is the S&P Regional Banking ETF. You can see I have the top holdings as of yesterday right here. So we have an average cycle length of 23 bars represented by these cycle brackets on the bottom. And we have a number of positively configured cycles starting back in May of last year. Positively configured means that the cycle ends higher than where it began. These vertical dotted lines show the cycle troughs. So each of these cycles shows a higher high, higher low, over and over. And we are approaching the, let's see, excuse me for just a second. Oh, so we were now 5 weeks off of what we believe to be the prior cycle trough, and we are approaching this 61.8% extension level, having broken through this prior cycle peak this week. So that's another higher high. Since we are early in the rising phase of this cycle, I've also put in a couple of higher levels, two higher levels. The 78.6% extension is at 63.87. And then we have a prior cycle peak from way back here in early 2023, and that level is at about 65.30. Our next cycle low is due in the late January to early March timeframe. Switching over to the daily chart, we have an average cycle length here of 40 bars, and we're in the rising phase of this current daily cycle. So both the reversal scout and the slim ribbon are green. That's showing positive momentum. Now, KRE has been trading up at this 78.6% extension level here, and the next level up on the short-term time frame is the 100% extension at 62.5. We have this rising support zone here, the top of which is currently at 58.04 and the bottom is 56.46. If it wants to pull back, there's also a 23.6% fib at about 59. So if KRE has a pullback and the support zones hold, then we believe that that would be a high probability setup for a long side move back up to these levels here. So a couple of other tools that we can look at to support a bullish hypothesis in KRE. If we switch over to the area chart, we have the OBI here, the option bias study, and that is sitting at a P3, suggesting that options trades should exhibit a bullish bias. And then if we go over to the 2-hour chart, our MCI is up at 98. The MCI has a weighting toward the longer time frames and suggests that a positive condition in KRE overall. And then I'm going to try to switch over to the Slimulator momentum tracker. Can you guys see that? Are you able to see the Slimulator momentum tracker?
Not yet, Katie.
No,
No?
no.
Not yet.
Okay, one second. Let me go to that really quick. I think you'll be able to see it now.
Yes.
Okay, great. So the Slimulator momentum tracker, I've just put in the single symbol here. And if you recall on the chart, I had the top holdings. So you can type in some of these holdings and see their conditions. So here we have Regions Financial, very bullish. Next, we'll do MTB, M&T Bank Corp, very bullish. CFG was another top holding. That is Citizens Financial, slightly bullish. Huntington Bank shares, very bullish. First Horizon, very bullish. And finally, we'll just look at one more from the top 10, Zion Bancorp, very bullish. So that's another way that you can use this tool to confirm your bias in a trade idea.
Katie,
So
I want to interrupt you 1 second.
sure.
Fantastic, you showed that. Just want to do a little bit of a plug because the momentum tracker is just fantastic for longer term position traders. That's part of the level 1 special that Matt's going to show you in just a few minutes. That's included in it. So it's really a great tool. Thanks for showing that, Katie.
Oh yeah, absolutely. So I recorded an options trade idea video for our level 3 and 4 members yesterday, showing an options strategy that could be employed to take advantage of this bullish hypothesis in KRE, as well as the high implied volatility situation in there currently. So if you would like to see that video, please do consider becoming a level 3 or 4 askSlim member. And I will turn it over to Matt or RV, whoever's next.
Yeah, I'll actually go first, Katie. Thanks so much.
Okay,
Great job
sure.
there. Let's share our screen. Give me one moment. All right, you should see a weekly and daily cycle analysis chart for Oxy. So we'll go ahead and pull up the intermediate term. Perfect. So interestingly here in Oxy, for a trade idea for level 3 and 4 members, we're actually long off of this bottom right here and caught that spike up and then, ended up pulling the idea as we got into that zone. So that ended up being really well timed because now things have flipped back down. Now, why have they flipped back down? Well, on the intermediate term in Oxy, we're still in that period of risk, which is late in the intermediate term cycle. So this is what can happen is you can get a move up, then a quick sell as we see yet another lower high form, and then a hit back down. So right now, there are good odds of a test at minimum of that old low at 49.75. There is a trough due 932, right around 12.1 or so here in Oxy. So again, this is why it is so key to watch for how an underlying behaves inside of that period of risk. Do we see a move up, then a higher low, and then a turn up? Well, that would say that this was the low. But, obviously what we saw here was a test, a lower high, then now a move down that is likely still favoring lower, which is why I have a short side bias. If we go ahead and hop over to the daily, you can see this was our long side idea from that sequence right here. So very clean, very quick. And then you can see what happened. We put in a slightly lower high versus that old high and are now in a short-term corrective period. So what am I looking for now? I'm looking for a little uptick here to fail, then for this to curl back down. And then, as I said earlier, look back at that old low at 49.75. There is a trough here that's due right around earnings. You can see it here. Let's just say due in around 3 to 4 weeks time. So I'll be watching for an uptick into this zone here from 52.31 to right around 53.25 or so, and to hold below 53.75. And I'm going to be looking for a test of that old swing low. So you can see what that would look like in terms of the risk. It would be right around 140 or so. And I'm looking for a move down of about 250. Okay, so that's our look here on the short side here for Oxy. And I'm going to hold and I'm going to go ahead and hand this off to you, Matt.
Excellent. Great analysis there, RV. Great job, Katie. Great job, Slim. Okay. Slim mentioned I'm going to be reviewing Wynn Resorts, ticker WYNN. So I'll be pulling up the weekly chart because we're looking at an intermediate time frame outlook here. And we're going to step through the askSlim, methodology so we can answer our core trade planning questions. First one we just did, which is our outlook period. So we're focused on an intermediate time frame. Next, and most importantly, is what's my directional bias? So we're going to look at why I have a long side directional bias at this time. So Wynn actually started this new cycle with a negative cycle structure and translation. However, the magnitude of the rising phase that occurred was such that it repaired that negative technical damage. As you can see here, it actually closed above the intermediate 78.6. So it repaired that negative technical damage, and then also by closing and pushing through that 78.6, it is warning now of a positive cycle structure. So that's very important. Also strengthening the case for the bullish intermediate bias is that the weekly reversal scout is firmly positive at this time. So now let's move over to the daily chart and gauge the short-term technical evidence on the daily chart. As I switch gears here to the daily chart. And what's most notable about the daily chart is that this advance that Wynn has had was so powerful that it actually broke out above multiple daily cycle peaks. So we had one cycle peak here. So this one here was very choppy, very flat, like a basing cycle. And then it took off. So there was some interesting warnings here that started to develop. You could even see the reversal scout starting to give you some earlier warnings about mid-cycle of some potential changes. We didn't see a lower low. So that low had held, and then all of a sudden the slim ribbon reversal scout turned positive, giving you further warnings of something changing. And then we got that breakout above this first cycle. We got another breakout above the second cycle here, and then we have broken out above this third. So very powerful advance. Also, what's interesting is there's some valuable momentum insights coming off of the daily chart. Our slim ribbon here, made up of the 3 exponential moving averages, are still in alignment, so that's still showing positive. However, and there's some continuation signals, momentum continuation signals, positive ones happening. You can see this here in our slim ribbon PO indicator that we have. However, the reversal scout, which is more sensitive to changes in price action, is currently negative. So when you combine that with the indicated cycle low timing window that Wynn just entered into today, this suggests to me some patience in terms of the long side entry, or at a minimum, you want to consider a smaller position sizing until we can see that additional positive price action indicating a likely bottom has formed and the new rising phase is underway. So what we would want to be looking for that would be, I'm going to bring over our handy tool here. We call this our multiple time frame swing trading, short-term swing trading setup grid here. We have weekly, daily, 2-hour, and then also a 15-minute here on the grid. And what I would be looking for is in this 2-hour time frame for the reversal scout to turn back positive, which you can see right now is negative, and then the slim ribbon to at least neutralize. That would start to give me some confidence that we have a bottom pending situation in place. And then ultimately, if that reversal scout, once that turns back positive, that would suggest that that new rising phase is already underway. So we use the shorter duration time frames to assist with those insights into the changes, and then the little bit longer duration time frames to then support that, and then obviously the weekly time frame to drive that directional bias decision making. On the MCI, also in terms of complementary bias indicators right now, you can see that we're at 58, which is still positive, showing that little pullback that's taking place. The option bias indicator has gone neutral, again suggesting some patience as Wynn likely finishes this daily cycle low right now in a bottoming process. There's also overlaid on here is LVS, and you can see that has a little bit longer to go. So it could get choppy in here, and then we should see this turn around. And if I go back to our combined weekly daily chart here, I'm going to zoom in and we'll talk about where the key levels are. So I'm looking at 2 projections. One projection would be a retest of the prior cycle peak. So that's around 110 or so. Right now we're trading around 100. And then the secondary projection is up here around 117, which would bring it to a test of the major weekly resistance area, which it had set here back in around April of 2023. So that's important levels to look at on the upside in terms of projections. And then the reevaluation levels. So I look at two different sets of reevaluation levels. The first is a reevaluation of the projections. So if we were to violate 89.50, I would have to reevaluate these projection levels. If we have a weekly close below 85.50, then I would have to reevaluate the overall directional bias. So I'm looking at two different sets of levels there to help me with my trade planning. And then furthermore, I want to note that the upside projections that I have, they're a function of the positive cycle structures and the current positive weekly momentum. However, I consider them to be inactive at this time. And until the shorter duration timeframes, as I discussed earlier, shift back positive, we have some further evidence in the bottoming process is complete, I will consider them inactive until that point. So that's a way to look at those projections. You want to have projections. Cycle analysis helps with that process, but then you have to use the other tools to let you know when those really activate. And that's how I'm looking at those right now. All right, Slim, back to you.
Okay, great. You caught me here in the middle of updating some analysis. It's like it never stops for me.
No, it doesn't. Probably would be the case of all of us at any point of the day. Harvey,
Yeah.
what are you up to? Well, I'm on.
Call me at 3 in the morning. I'll give you the same answer.
That's right.
All right, that was it. That was trade planning with the askSlim team. Our purpose in doing that is so that you learn. All we want to do is teach what we do so that you can raise your odds of success because, of course, your success is our success. All right, let's move on in here. All right, I'm going to turn this back over to Matt, and he's going to give you a little bit on our services and this fantastic level 1 special that is going to be absolutely great for people that are brand new to us or free members that want to get a good look at what we do. Matt, show them this amazing special.
All right, will do. And I'll keep this as brief as I can, but make sure it's as informative as it needs to be. I'm going to bring us back over to the homepage of askSlim.com. And many of you are probably familiar with us. However, for those of you that are not, we are a technical analysis services, innovative trade planning tools, and comprehensive education firm. And we offer various tools and services for a number of different trading styles, including those that are interested in day trading. So I'm going to jump over to our memberships area here. And we have 4 different core membership levels, and then we have our separate day trader service. And the higher you go in the core membership level, you have a broader experience with the technical analysis coverage that we do, including additional markets, stocks, ETFs, futures, and then also you can get direct access to our custom charts, indicators, and trade planning tools as you get into the level 3 and level 4 memberships. And as Slim mentioned, we're excited to announce a special offer for level 1. You can see the button up here on top. And level 1 is going to give you a really great introduction to the askSlim methodology and some of our custom trade planning tools. So this special that we have going on right now that we are launching today for level 1, as it's indicated here, is for 1 month. So you get 1 month of level 1. It is 50% off. It's only $10. So it's a $10 price point, and it's non-recurring. So you're going to get full access for a month, and then it's going to expire. So it's a phenomenal deal in terms of the low cost, and then the reward in terms of the knowledge that you'll be able to gain for about the cost of probably a Starbucks egg sandwich or something. All right, so let's jump into a few of the membership highlights that you're going to get with that level 1 membership. We have a daily stock index report. So I'm going to back this up 1 step here. And we have an archive that you'll see of the daily snapshot. So every single day after the market closes, probably a few hours after or so after the market closes, sometimes into the night. We have to wait for get the charts completed. We will post the daily snapshot. I post that. We combine within that daily snapshot very comprehensive technical analysis on the S&P 500, the NASDAQ 100, and the Russell 2000. So if you're someone who really wants to follow the nitty-gritty granular technical details where we are, and you use the S&P, the NASDAQ, and the Russell as a proxy for your trade planning, this is the report for you because it is updated every single day. Slim and myself and Arvi and Katie, we're all looking at these charts, and then once we've settled in on them, Slim will put his final touches on the daily, the weekly charts, and I'll do a 2-hour chart. So I'll show you what that might look like here. You have the 2-hour chart. You can blow this sizing up. And these are all custom annotated, and it has our proprietary indicators on them. So great detail when it comes to the charts. And then there's price projections, short-term, intermediate, longer-term. I evaluate those on a regular basis. We do this the same for the NASDAQ as we do for the S&P, and then also for the Russell. And then we include some static momentum charts in here. And these are great ways to, again, get a feel for that directional bias. And you can see from this chart here, the longer term conditions still very, very positive in the indexes. And you can see from our MCI readings, very high right now. So as Slim mentioned, although a correction is due, the indicators that we have are still pointing to a positive overall condition. And once something changes, that's why we do multiple time frame analysis. You'll start to see it. These near-term conditions will shift negative, and then the short-term might go neutral, and it'll really start to tell you that peaking process is in place. So we have our MCI comparison chart here, and then we have our daily slim ribbon comparison. So there's a lot of relative strength comparisons that you can do. So very visual cues into the conditions, cycle analysis table, so you can get a feel for the timing, what phasing we're in. So it's very comprehensive. Again, so this is a great introduction to our methodology. And you can connect with us directly on Discord if you're a level 1 member, and also our other members. It is an exclusive Discord experience. It's only for premium members, but level 1 members do get to enter into that Discord. So that is another benefit. As Katie did a great job of demonstrating today, we do have the Simulator Momentum Tracker, and that gives you over 1,000 symbols that you can review. So if I wanted to jump into any one of these, let's just jump into XLB materials. You can see this directional bias ratio. I can flip that to short term, and you can see what that looks like. We could even go to long term, see 71%. So those longer term momentum conditions in the XLB materials are very powerful right now, very strong. I wanted to also jump back here. Let's just take a look at the S&P 500. So you can actually pull up and scan the entire S&P 500. It's obviously going to take a few more seconds to load, but it's an incredibly efficient tool. So we can go right to this directional bias, which is a function of an algorithm that combines our short-term, intermediate, and longer-term custom momentum indicators, but is weighted for, as Slim mentioned, those position traders, those longer-term position traders or investors who are more active. So this is set for about 3 months outlook or beyond. And you can just click on the directional bias indicator, and that will then pull up the most bullish, so the very bullish, and then you can also switch it to see the very bearish ones. So very quickly, you can get a sense of those symbols that are fitting the needs you may have, and you can cross-check your own work with these. You can see right now the long-term pie chart here in the S&P is very bullish at this point still. If you jump into a specific symbol, what's interesting is you get almost a painting of the directional bias. So what it's doing is it's measuring when there are changes, cardinal changes or soft changes in the directional bias, and then it will show an arrow with a different degree of intensity when there are these minor changes that are occurring, meaningful but minor. And you can see, as an example here at BSX, that all have been positive right now. And most recently, it's gone back to very bullish. So it's a great way to get this visual picture of the directional bias changes as they happen from that longer term time frame. So again, this is included in level 1 as well. And then a couple other ones is we have a select Spider ETF. So there's 5 symbols that we look at. This is a weekly report. Again, it gives you a great introduction into our process. And we have XLE energy, financials, industrials, technology, consumer staples, and then there's a relative performance where you can see the momentum indicators and then also our MCI reading and the rate of change on that to get a feel for those that are moving from, let's say, more bullish to more bearish. And so it's a great visual picture again. And it's a great way to learn about the way that we approach the markets. You get to see the daily, the weekly charts, and then there's the technical overview from both the upside, the downside perspective, where I put in here very particular areas where you can see things that would make the bias likely change. So again, very comprehensive. If you enjoy technical analysis for $10, there's probably nothing else like it out there. And if you're looking for some custom tools, trade planning tools, you have the Slimulator Momentum Tracker, which we showed, and then also we have something called My Trade Ideas, where you can organize your own trade ideas. And if I click on Create New, and this really forces you, even if you don't do this on every single one, it just sets your mind right, your trade planning mind right. It makes you strategize appropriately based on the key types of components that you'd be wanting to put together. It's the same, really, it's the same type of information that we went over in our segment. You want to select your outlook period, you pick your directional bias, make sure that's matching up with your position bias, your trade type. So what are you seeing? Is this a reversal from an oversold condition? Are we at a momentum? Are we looking for a momentum continuation and we're now testing supports? So it's a really great way to step yourself through those key core trade planning questions and then save those for yourself. So as you're doing your homework, you're reviewing charts, you can save your best ideas and even the ones that you execute, and you can track them. So there's a lot to offer even in just level 1. And again, that's only $10 and it's 1 month. It's non-recurring. And if you have an interest, you can go to the top of the page and you can click that here. It'll take you to this page and you can sign up and it will automatically expire. If you wanted to continue, we'll likely have some special offers for you at that time. All right, Slim, back to you.
Okay, there's a question on there. How long will the $10 level deal be offered?
Yeah, it'll probably run for the next 2 weeks is what we're looking at.
Yeah. Okay, great. We're actually doing that for $10?
I know. Yeah, it's a great deal. Like I said, Starbucks egg sandwich and a coffee, might even be more.
I wonder anybody who's thinking about, all that stuff for $10, if they have any concept of the number of hours that went into development on all of those things and the number of hours to keep it up to date,
right,
that goes on. So
yeah, they should have a lot of fun for $10. You'll have a lot of fun. You'll learn a lot. And like I said, you can connect even to the askSlim members in our Discord and the analysts. If you have questions on the daily snapshot, cycle timing, we're there to help.
Yeah, great stuff.
Yep.
Okay, let's move on. This is where we answer your questions. Or if you have comments, we'll be glad to get those from you. So we'll probably do this for about 10 or 15 minutes. So we have a number of questions in there and we'll handle those, and we'll probably cut the questions off in about 3-4 minutes if you want to put anything else up there. I know that my team must be going through these to see which of the things that they're going to bring up. Anything on the stock market, there's a question on the VIX. I'm going to show the VIX during the stock market analysis. So I'll look at that. There's a request on there for looking at also the Russell and the NASDAQ. I'm not going to look at those today. I'm going to look at the S&P 500. Mostly what we're looking at is pretty much the same thing, except that the Russell now is a little bit stronger. So I'm not going to look at those today. Today is really focusing on SPY. There is a question directed to me. It says, Slim, why do you think the market will go down in November besides the money flow in such a strong market? So if you were a student of our work, you know that our work looks at cyclical analysis, cycle analysis. And a cycle is measured from trough to trough. And at every trough, whatever symbol we're looking at sells off. based on based on all of the inputs that we may have. In other words, if we're looking at a cycle that's very long and very good magnitude to the upside, the translation configurations are all very positive, we would expect that the decline would be brief. And more shallow. If the market turns down or a symbol turns down much earlier, then it has a long time to decline and should be long and steep to the downside. So what the time frames that we're looking at are for whenever the market peaks, then we would then know a level that it's peaking from and be able to assign probabilities to how far it will correct down to and for how long the duration of correction would be. It's very mechanical for us. So when I look at decline to start, originally the window for the period of risk was September to early November. Now, with the market moving so far, it's likely not to fall as far as originally thought, because it's holding up for a long period of time. But there's actually what I'll show is a potential that it declines into December. So that is a possibility. The election is actually maybe skewing it a little bit. So that might be a factor in here. So it's a normal function of money flow, ebb and flow, and markets move to extremes. The rubber band gets stretched too far, and then it peaks, and then you have the corrective phases. So it's all a natural flow in the market. And I think that's my best answer for you regarding that. Why I think it'll decline to November. It follows very much the analysis we do in everything. All right, team, the only thing that I see for me to look at is two symbols, which has the looking at the NASDAQ, at the natural gas and at TLT. So I'm going to look at those two, and then I'll turn it over to RV and Katie to do the rest. We'll look at if you give you just one more minute, and then we're going to cut off the questions. So if anybody wants to put anything else in there. So I'm going to switch over now to look at my request for natural gas first, and here's the natural gas chart. So I'm going to first look at the intermediate, which is the weekly, for you to see. And of course, it had that huge decline over there. And what I want you really to look at is the harmonic families that are in here and how absolutely beautiful they are. Let's just look at these last three right over here. And you can see that there is a dominant right there. I actually could make that a little darker for you to see so that you can get a sense for where those dominant forces are right there. And you have an intermediate and you have a minor. And all four of those little cycles are very clear in the within the harmonics. This is something that you learn about the principle of harmonicity as one of Hurst's 8 principles if you take our cycle analysis workshop. If you just want to see a free video and get an idea of what that is, just go to the top of our page, front page, 2 workshops, and click on cycle analysis workshop. There's a free video there, so you can get some idea, and there's a table of contents for the whole workshop. So what are we looking at now? Let's just look at these last 2 harmonic families right here. And what we're looking at is the decline that is going on right now is actually pretty much on time and coming as it should. Now, you could see here the intermediate cycle right there, and then the minor cycle right over here, both coming to a trough right here. And then the next rally began where both of them were pushing up, and then it gets through the 78.6, which is pretty healthy if it does that. Now you have this decline going on right over here, and that decline points out to somewhere early November. So another couple of weeks. We would expect that the daily chart would give us that same sense. Then it probably rallies again over here. And this whole corrective process, and like this period right over here at the end of the cycle, you know, the question that I had a little while ago on the S&P 500, why I think it's going to decline in November. It's the same answer. When you get to where the time is run out on the cycle and it's going to complete with some capitulation, disappointment, people getting out of positions, you get into these where you have 3 cycles pointing down right over here into that decline. Well, that's out over here. That's next year in January, February, maybe into March. In the meantime, we'd expect it to come down in here, make some sort of a bottom, and then get another rally. Momentum conditions in here have been positive. It's flattening out a little bit, but not much. So we have positive conditions momentum-wise, which says that the longer-term forces are still okay. And it means that this rally in here, when it does come, will probably be pretty good. And where does that come to? It comes to the trough right over here, somewhere around maybe this low, being that it got under the 78.6, I would guess this next rally here is going to be somewhat deficient. But once I have the anchor point right in here in this decline, I'll put in the resistance zones over here. So I don't really have that yet, but this is what the cycle looks like. Down and then up. You see momentum in here as I look at the slim ribbon PO. And as I look at the slim ribbon has turned negative right there. And everything points as I look to some of the evidence in here is that a bottom will occur sometime in the next couple of weeks, and then a rally will occur, but that rally is likely to be deficient and then moving down again. Now, I think energies overall are going to be weak. This is pretty much in line with that. So I think a bottom in the next 2 weeks. I think a rally, that rally will be deficient and then probably roll over again for another decline to complete this minor cycle on the weekly right over here. So that's a look at the natural gas market. Let's look at TLT, which is the 20-year on the bond market. And again, we have the side-by-side up here right now. Now, this is so interesting because, well, our analysis turned down and we thought it was negative. Here you could see where the slim ribbon crossed over, and then this broke below the 78.6, and then it broke below the cycle low right there. That really told us that the intermediate correction was in hand. And we want to really show you that when that occurs, that the directional projection is to the downside. And we've done that right over here. Now, we had some discussion on the team whether or not, when we should show the downside directional projections, and certainly that should be when the conditions are such. But I always show it to complete the cycle. So we're having some discussions about some potential changes in there. But this is actually very much in line with the momentum turning negative right over here, the cycle turning down right over here, and then the completion of it right over here, which comes the first week of November. Somehow there's a lot going on in the first week of November, including either Kamala or Donald running the country. So important time frame right over there. That says that bond market likely to get a rally after that. And if that happens, money flowing into the bond market, like right over here, also probably means money flowing out of the stock market. So keep that in mind of the inverse correlation that is likely. So this is a buy zone right over here. We'd expect that in the next 1 to 2 weeks it bottoms, and then we get an up move in TLT and in the treasury market, and a downside move in yields. And then after that rally is over with over here, you get into another corrective phase out there, but that takes you out into the end of the first quarter of the year. So in the meantime, we look at October, mid-October or so, November, and maybe into the end of the year as a period where the bond market is likely to rally and that the yields are likely to fall. Let's just look at TNX. That's the interest rate market right there. I just said the yields are likely to fall, and here you could see a projection right over there for the yields then rolling over from that resistance area. So I want to be consistent in that analysis, and right now we're getting into this rally period for yields, but then once it's over with, I think yields begin to move down pretty sharply. So I wanted to show that also. Those are the two symbols that I'm going to review. And now I'm going to turn this over to Katie and to Arvi.
All right, great. Thank you so much, Slim. Great job as always. Let's go ahead and hop over and I'll start and hand this off to Katie. So the first one we're going to look at is Lilly. So Lilly has, as we all know, been just absolutely on a tear here on the upside and is now getting a little bit more choppy of late, but overall action is still positive. We have a series of higher cycle highs, higher cycle lows, bullish right-hand translation in each of these cycles. Now we have a trough that's due 923 to right around, you can see 12.2. So we are watching for a low to form. Is this the low? It's still too early to say with the highest odds that this is the low. It could still have one more dip because we are inside of that period of risk. However, once this low does form, as long as we're holding above that 61.8 fib at 817 quarter or so, there are good odds of a move through these old all-time highs at 972.53. If we jump over to the daily chart, again, we are going to be watching that 78.6 very, very closely at 946.70 or so. If we can get a daily close over that, that would increase the odds that we have seen a key low form. So you can see we are looking for it to either form here, as it already has back here on 930, or back here into that next trough, which is due, you can see in about, let's just say about 3 to 4 weeks time period. We just have to watch this closely. Obviously, we also have earnings, so that will likely have an influence on how this ends up shaping out, right? So we just are going to be watching that 78.6 closely again. And if it moves through that level on a daily basis, that would indicate that the low is very likely in place. If we jump over to NVO, now this is not in as good of a pattern. It obviously has been, we were seeing a series of higher cycle highs and higher cycle lows. Then all of a sudden that changed when we had our first close below that prior weekly low right here. So now what this is really looking like is like a bear flag that is poised for one more hit down. You can see that there are fibs from 109.70 down to 97.80. There's a trough that is due, let's just say towards year end. So we are looking at this as a bear flag that has a higher odds play of moving back down. If we jump over to the daily chart, you can see we now have a series of lower cycle lows and lower cycle highs, a breakdown in the cycle structure. We are watching for a rally to fail in this zone, 119.70 to right around 123.60, curl back down, move through this old low at 113.79. You can see there's also earnings, and we have a low that is due over the next 3 to 4 weeks here as well in NVO. So this low is also syncing up with that of Lilly, which makes sense. If we jump over to MSTR, we've been very positive in MSTR in all of our videos that we've done. We've had a lot of questions about it. Now, what's really important, first thing you'll see here is, yes, there are a lot of lines on this chart, but I purposely left them on so you can see we had lows due here, we had lows due here, we had lows due here. This has been acting exactly in line with the way you would want this to act. And just look at this as any old chart. Doesn't matter what you're looking at. This is a very bullish chart. You're seeing a big rally, a sideways consolidation, and now a move out of it. So this is very, very strong. There's a trough that is due over the next 3 to 4 weeks. We are watching for it to put in a high and then get a dip. That dip is very likely an opportunity, and we'll be looking for likely still meaningfully higher in MSTR. There is the zone up here from 223 up to around 260. 260 should be fairly easy here on the upside in that next rising mode. So I'm very bullish in MSTR. If you jump over to the daily chart, now off of this low, what happened? We formed a higher low basing cycle. This is where that old weekly low formed. You formed that base on the daily, then you saw this buying here. And then after that, you can see we just ran and surged in MSTR. And you can see we had a trough that was due back here, also formed on time, turned up again. Now, where are we now? That is obviously what everyone wants to know, right? Is that we have a zone from 220 up to 230. 230 is still quite reasonable. We had a look at that 78.6 fib. We then curled back up off of it. I'm going to be watching for a move back up to 230, watch for a dip. And then this is when we have a low that is due here. You can see due over the next also 3 to 4 weeks time. And we're going to be watching for this to be that next larger move higher off of that trough as the both weekly and daily cycles start to push back up on the upside in MicroStrategy. So very, very bullish look there. Jump over to booking, BKNG. I do have that one. And what we see here in booking is we had a trough that was due 6.3 to 7.29 or so. That trough formed right on earnings and then just surged back to the upside. So we are still seeing a series of higher cycle highs, higher cycle lows. There is a zone from 42.77 to 4,600. 4,600 is still in play here in booking. And on the daily chart, there is no obvious low on this chart, but we are going to be watching for a low to form. It may end up forming around earnings. So if we do see a move down on earnings, I would be watching for that to be bought and then for this to curl back up to the upside. The overall action here is also quite strong here in booking. Let's go ahead and hop over to JP Morgan, then I'll hand this off to you, Katie. On the intermediate term, you can see we're still in the later stages of that rising mode. I'm going to be looking for a move towards this zone from 230 up to 240. I know it is a wider range, but that's what we have here. And then we'll be looking for it to give a dip. That dip is also very likely an opportunity to be looking back to the long side here on the intermediate term for a move back to new highs. This is acting very, very strong off of this higher low basing cycle right here. You saw a series of bullish right-hand translations here and here. Bullish right-hand translation is still in place in JP Morgan on the intermediate term. And as you can see, also a low due somewhere around year end. Daily chart, we formed our low right on time, and then we turned up. You can see that little higher low set up there, and then we curled up, obviously post earnings here on this large move up, and are just grinding our way a bit higher. 228 to 234 are the levels up. Our next trough is due towards the end of, looks like around, let's see, 11:25 or so. Let's just call it right around Thanksgiving. I don't really love that to have a low due around then. So you're gonna have to see how this ends up shaking out. The bias is up. Let's see where this ends up forming its high. This may end up forming a little bit late. That's what I would probably say. This forms a little bit late. Let's say 1 week after or so, and then turn up because there isn't really a whole lot going on around that time frame, as we all know, right? So that's a look there in JP Morgan. Super positive pattern. And we're going to go ahead and hand this off to you, Katie, to look at the others.
Okay, I will share my screen. Let me know if you can see Cody.
Yep.
Okay, great. I'm going to switch it over to the weekly chart real quick and zoom in a bit. Okay, so this has broken below a key cycle low support back here in June. This was a positively configured cycle, but it really just failed immediately just after about 4 weeks, hit the 23.6% fib off of this move, and then broke down. And this week has been just terrible. We're trading now at the 78.6% extension. We do have a timing window that's coming out 12/2 to 110. So right around year end, and any rallies up into this area would probably be bear flags for a move back lower. So we could get a retest of this level if we are able to get a bounce. I do have some other projections down here. $6.93 would be the 100% extension level, and then you've got some cycle low supports that are relatively close to each other if it wanted to get lower, $6.19 and $5.90. So this is not looking good. Over on the daily chart, we are in the daily cycle timing window. You can see all these negatively configured cycles, lower highs, lower lows. And now we are in a timing period where we could get a bounce. And then we also do have earnings, so we have to be careful around that. Anything could happen. This is the cycle that syncs up with that weekly cycle timing window. Notice it ends 12/26. And if I switch back over here real quick, you can see that that is right in the middle of these weekly timing windows. So we would expect this to get some type of a rally, and then that might set up a good selling opportunity into the timing window. Next, we are going to look at ExxonMobil. Let me zoom in a little bit here. Okay, so we are inside that period of risk. We do have an upturn with momentum with the reversal scout, and that typically helps us confirm that those intermediate lows are in. So we have this marked as our intermediate low, came a little bit early. We've got a rising support zone here that we are just trading at the top of that this week. So we would expect for ExxonMobil over the course of these very long cycles, these are 40 bar cycles, to be able to make it up to these levels. And those are 129.76 and 135.75 on the intermediate time frame. Let's switch over to the daily chart. You can see that we are coming into a time period where we have a daily cycle timing window when we expect this current cycle to form its trough. It is trading at the top of the support zone right now. And so I have two projections. If we got a little bounce, we could just chop around in here and trade right around that area, or perhaps down to the 50% fib level, which is around 117. Again, earnings right in the middle of the daily cycle timing window. Very important to watch how this behaves on earnings. Let's look at NVIDIA. Zoom in. Here again, we believe that this intermediate low formed a bit early. We do have the upturn in momentum that typically helps us confirm those intermediate lows on our proprietary reversal scout. We are trading right now right at that cycle peak resistance 140.89, got up to that level. And I do have a couple of projections in here. If it wants to exhibit weakness, it will probably stall right around this area, or if it wants to break through that, we are very early in this cycle, so I would suspect that it would be able to get up into this zone. And this area is from 152.16 on the bottom to 166.10 on the top. And this doesn't trough until the end of March. Over on the daily chart, you can see we hit that 100% fib extension level off of the short-term levels. That was up at about 141. And we have a daily cycle timing window coming up between 10:31 and 11:08. So, we might make it back up to this level again. And then these are the short-term supports. If we can hold this support zone, then I would suspect that this would set up a good long side opportunity. So this is 130.26 on the top and 124.48 on the bottom. We'd like to see that support zone hold. And finally, we're going to take a look at Tesla. Tesla is inside the weekly cycle timing window. You can see I have this projected out to the very end of the timing window, and there's a reason for that, but we do have earnings coming up next week, so we need to watch how it behaves on earnings. But right now we've traded into the top of this support zone. The middle of that is going to be at 204.90. So that's where I have the projection to. If it wants to get lower than that, we'd be down around 189.30. Momentum is still positive, but this is, coming into that timing window when we would expect one more throwaway. And the reason that I have it projected out into the end of that weekly cycle timing window is because you can see right now we are in this daily cycle timing window, and we may have our daily cycle low right here. I have that shown on here with this dotted horizontal line because we could get another move to the downside. And so this cycle, 12.1, is when this next cycle is due to trough, and that would fit right within the very end of that of this weekly cycle timing window. So we may get a slightly late low out here. Momentum is negative. You can see that if this is the low, it certainly is not impressing to the upside up into this resistance zone. So we'll have to watch this, especially with earnings coming up. So that is all of the charts that I had. So we'll turn it back over to Slim.
All right, that was great work by everybody. Just absolutely thrilled when we do this because it really shows two things. Number one, the incredible value of the information that's on the charts and the way that we present and annotate them, and the fact that we're all really analyzing with exactly the same style, and that is a very mechanical style on what is actually a analytical style that's an art form. So we've taken this art form and made it more mechanical. And even though we pretty much start with a blank canvas and then put all of our information on there, we're all presenting in much the same way. And what that means is that you can all do that. You can all get the information from the charts as we do, and really have a very, very good understanding of the conditions of every single symbol based on all of these different variables that we put in there. And that, I believe, will really help you raise your odds of success in that. So again, anybody who is interested in learning the style, you can go to a top of our website, go to workshops and watch the free video in the cycle analysis workshop area, and you get a little more of a feel for that. And you can see, if you scroll down below, what all the modules are in that workshop. There's 24, 25 of them now, and just an amazing learning process that you can go on. So great work by the team. Thank you very much. All right, stock market analysis and projections. Important information before I get into this. Please do take a moment to read this slide. It's about our approach to analysis and about how you use the analysis that we share, and the important aspect of trade ownership. You must own your own trades. One more time, I want to remind you about our level 1 special, 1 month non-recurring, $10. You're going to get everything that's on this page. If you're just now tuning in or watching a clip of the stock market analysis, go back, watch the whole show, because we have great things earlier in the show, and watch Matt's presentation on this, and you'll get a good sense for everything that we're offering for $10. You won't believe it. Non-recurring, sign up. If you don't like it, well, it's not going to renew. And if you love it, well, you can choose to come back at any level that we have available. So please do look at this level 1 special if you're brand new and not a member, or if you're a free member. All right, stock market, multiple time frame analysis and projections. I'm going to look at the SPY, weekly, daily, intraday, and really review our proprietary indicators as we move forward. So let's first look at this. This is our market conditions monitor. I'm looking at the pro version, and this is a really important information as it looks at the algorithms that we have built into it. And I have this set to short term right over here in the trader view. The other view is time frame view that's there. We'll stay on short term right now, because the short term is telling us that you're either very bullish or bullish, looking at SPY, QQQ, IWM, or DAI. They're in that very bullish conditions. So no matter if a correction is anticipated, there's really no reason, based on everything that we look at, to be short yet, because the market's not telling us so. Even if you look at the near term, which has got really short-term inputs there, it shows you very bullish. And the only thing that's changing is the IWM right now, which has turned to neutral. So these are actually dated changes when these changed, because there's very short-term inputs on here. And you can see that the IWM now has turned neutral on the near term. Very short-term information there. Here's the short term right there, and the intermediate term, as you could see, all very bullish when you look at that. So now there's been no reason to believe the market was going to fail yet, no matter about valuations, no matter about cyclical corrections, any of those things. It's important to refer to this first before you really get into the chart analysis and have that bias. The market is telling you it's really strong. And now let's look at that on the charts and look at what the first information might be that would be changing on that. So let's switch over to the charts right now, and we will look at, let me just put this down. And let's start out by looking at the VIX first, because we had some people that have asked about the VIX. And we have been, let me just go to the weekly first. We have been in a period of an elevated VIX. It's very unusual for the VIX to be elevated at a time frame when the stock market is super strong. And of course, what's going on are two things. That is the Middle East tensions and the election coming. And when you look right over here at these cycles, it's the rhythms in here are just outstanding. And right in here is where we're looking for the market to begin to price in much higher risk, much higher volatility right there. And since it's already elevated, it really has me asking the question, as you can see right over here, we have IVs rising. Is the stock market actually peaking? Is that what's going on as it's rising? And investors just starting to buy insurance for what they believe will be a period where there is selling coming into the stock market. Now, this is where those sink troughs are around mid-October. We've had this timing in here for a long period of time, believing that the market would continue to move up until mid-October. Now, when I switch over to the daily chart right over here, you can see there are two out-of-phase cycles in here. So one that you can see the trough right there, and you can see the trough there, and you can see the trough there, and one potentially here. So here is the first timing right here in this window that you can see where implied volatilities could be moving up. It actually might wait to here. And interestingly, when this cycle right there has its trough is on the 4th of November, right around election day. So we believe that IVs will be moving up sharply, either starting any minute or maybe chop around in here and then not really have a real blast off until after the election. So looking at the VIX, it says to us, be careful. We're getting into a time period right in here on that weekly chart where it's very likely that you're going to have a sharp upside move in IVs. I think they're easily going to be into the mid 30s, but we could see 40s and 50s depending on how sharp a market corrective period is. So I wanted to look at that first because looking at market conditions first says to us the market's very strong. Looking at implied volatilities now has them elevated, but the cycle patterns say not quite ready to move to the upside in implied volatilities, though very soon. Now let's switch over to the charts. And what I have here on these charts are, let me just get my pointers available. On the weekly chart right over here, weekly, and here we have daily, and here we have daily momentum. Here we have the 2 hour, which I'm going to show you something very different than the 2 hour because it can be a good tip off for when the market is making a peak. So right now, you'll notice something a little bit different in here, and that is based on a question presented by my team. The question is, wow, all of these things are so incredibly strong, and the market's been this bullish. Should we actually be showing the downside projections versus just maybe showing the period of risk? Because I don't really have an anchor point up here on the top to be able to project to what levels it's going to be moving to on the downside. So what I've had in here, and I'm just going to grab this, is a projection down into here, into that midpoint right there. And that's what the chart has looked like to this point, up to that. Now you can see that, you know, this is very likely to be where the correction comes in there. The question is, and my level 3, level 4 members can answer it, would you rather see the projections to complete the cycle as we have always done? Or would you rather that we wait until the conditions are negative and then have it look like this? And then once it turns negative, then put in the projections. We'd still show the periods of risk. We'd still show the momentum. We'd still show all of that. The only difference is that we wouldn't project to the downside until the conditions tell us such. And I think that's a very, very interesting question because it could be deceptive. You know, I'm showing, you know, we show a downside move when everything points to the upside still. So we want to really make sure that we give you the most valuable information at the time and then put the projections in when it is most important. So I see interest. I see right now the answers coming in on the Q&A that says, yes, leave those in there. And I really want to hear through email or more answers of whether or not it makes sense to wait or not in here. In the meantime, we are looking for that period in here of correction. As you see right over here, It was the final 3 weeks that the biggest decline came right over there. And if I go back into these other cycles right here, you can see that it's always right towards the end where the market gives way in a very big way and then have these declines. So that's where we are right now without no peak yet. No reason to believe yet that the market's going to go down, other than it's at historically high valuations, and that the normal cyclical movement would then have it pointing to the correction, which is very, very likely coming. You see in here the note, potential large drop Q3 or Q4 or together. And that's what I believe is the highest probability. So supports right now, 557. Right over here is about 550 on the SPY. Then we get into this lower support and the dominant support down over here, which is 540. This is 531. And, to get a 10% decline, which is quite reasonable, you'd lose 58 points, 59 points, which would take you down into the 530s, which is somewhere down over here. Now, when you look at that and you want to project out into the longer term, you can see why we have believed that the bull market couldn't end until sometime next year, maybe early next year, maybe somewhere in the first quarter or late first quarter, looking at this. So whatever decline comes in here, it seems like it would be quite viable, and that the next rally would take you to even higher, extreme, ridiculous valuations on the upside. And I'll never stop saying that because, again, I traded the Nifty 50, I traded the .coms, and I know that eventually those leaders that are going to that are driving the market up will go away, and we'll get a real bear market that comes after that. But in the meantime, this looks like a pullback in here. We'll call it maybe 6 to 10%. And then another move to new highs over there. That's your intermediate term outlook, looking at that. I'm getting more on the coming in on the Q&A that says leave those downside projections in there. That completes the cycle. So that's interesting. So now here we are on the daily, and you could see these vertical lines are the actual place that these cycles have their troughs. And this is the cycle patterns right in here. The cycle's been shortening a little bit. And for our members on the SPX chart, you will see the cycle counts are added in there. And this was a low. This was only at around 21 days off of this low right here. And these were been, 23, 21 days. So this cycle bracket is now shortened from what was 24 to 22 bars, as you can see. I want you to note the option bias indicator. Katie showed that earlier on in the show. It's extremely valuable in telling you, if you're an option trader, to keep your positions biased with the OBI, the options bias indicator. I developed this back in the time that I was on Tasty Trade because, and believe me, I love those guys. They're great friends of mine, Scott and Tom, and so many that are there. But they do teach you to be short options. And when I was there, traders were writing to me, they're getting run over by being short options. Put your calls, depending on when it is. I wanted to develop an indicator that could help you avoid that so that you would not get run over by the market. I know lots of people right now have been shorting options and getting run over by the market. This helps you a lot with that. And you can see that it's still strong. Right over here, you could see our both the a slim ribbon and the reversal scout are positive, and that gives you a sense for how strong this is. This was a swamped cycle. So what happens is that because the upward pressure from the weekly is so powerful, as you see here, what happens is that the correction right in here becomes rectangular because you have the downward force here, which is less of a force than the upward force that you have on the weekly chart. And it gives you downward pressure and upward pressure meeting each other, and the correction is sideways. And this stays very positive And that is a very, very good indication that once it breaks out above the cycle peak, that is then, your next upside move, which occurred right in here. Here's your minor supports right in here. The zone is about 578 to 573 on the downside right now. Now, notice this question here. Which cycle makes the weekly trough? So the weekly trough, I'm going back to weekly. It's very obvious that it has not occurred yet. So that is, I think, important. Now, I got a question from a level 4 member that I think is worth bringing right now and talking about, and that is about the monthly pattern. And if it's possible that we were looking for a minor monthly low, if that actually happened already. And I'm going to show you why the odds are small that that happened. Here is your monthly chart on the S&P 500. And the question is, could that have happened already? That would have happened right here. That decline is that decline that occurred with the yen panic right there. And then the market moved up again. As you could see, I'm projecting for that trough to still occur. In other words, that pullback to occur in this November-December period on the monthly chart. Let me show you why I believe that the probabilities are small that this low has occurred already. And that's because of cycle analysis theory, which I teach in the cycle analysis workshop. And this low right over here occurred at a time that does not align with the weekly. So her question was exactly based on the principle of variation. Could the variation have made the low here versus right over here? And I'm going to show you why that's not the case. And this might be way too technical for a lot of people watching this show right now. But that low would have occurred right over here. That's that yen panic low, which exactly comes onto this minor cycle low. But the dominant cycle low is way out over here that we've been projecting. The principle of synchronicity says that wave price movements are phased to cause simultaneous troughs. This would not match up with the dominant cycle as a simultaneous trough. That says that the principle of synchronicity says that the trough is out over here in November or December. So I wanted to answer that question before moving on, because it really talks to the fact that the next 2 months could see a sizable move to the downside. If this ends up to be that monthly trough right over there, it will mean that there's a dominant shift that went on, and we will be looking at this potentially as where that dominant cycle is. That is a very low probability. So right now we have to stick to the highest probability that the principle of synchronicity says, and that is monthly and weekly will have its trough out over here in November or December. I have a question on the OBI. Is that a level 3 or 4? That is a level 4. You can have it live on the Thinkorswim platform. RV showed earlier that we do illustrate it on some of the other charts. So you have any questions on that, right? I'm sorry, Matt showed it. Write to Matt at askSlim.com, and he'll answer any of those questions for you on the OBI. But it is a very important indicator for you to have. Here's the question: which of these cycles will make the weekly trough? This cycle right over here ends about the first or second week of November. So that would make, once this peak is in place, to pull back into first or second week of November. This cycle right over here ends first or second week of December. Now, when we went through all the charts earlier, RV and Katie were showing quite a number of stocks that had important troughs in December. So that's that helps me with this analysis in saying that, I really think there's a pretty good probability that this cycle is going to be the one that has the biggest decline, and that what will happen would be that you get some kind of a positive translation in this cycle right over here, some kind of a decline. It moves up right in here, And then this is your biggest decline right in here into that December timeframe. So that's the way I would project it right now, though there is still a possibility that the big downside move comes in this period in November. I don't know which of these will end up to give you the trough, but I still think that's coming out there in the November-December period. Now let's look at the momentum conditions, and you can see momentum is very strong on the SPY, and you can see on here the slim ribbon PO right over here. It gave you momentum signals that said it's going to resume on the upside, and that's exactly what it did right over here. Now I'm going to switch to a 2-hour chart and show you something that's a little bit different. Those of you that took the cycle analysis workshop, in module 17, I talk about this right there, which is the detrended price oscillator. Essentially, what it does is it takes trend out of the action. And it is one of the best ways to identify cycles because it essentially takes the trend out, leaves cycles in, is what it does. Now what I've done is I've taken the 2-hour chart and I've added the daily cycle brackets onto it. So you could see that this actually is a daily cycle. This was your daily cycle. This is the rising phase we're in right now. That is beautifully clear when you look at this. Now, how am I going to use this oscillator? Well, first of all, you could see where it gives you that sense for how those cycles are defined in there. It also has a little minor cycle designation in each of them, as you see right over here, which helps you also see the minor cycle. I'm going to use a tool that I don't often show you, but it's one that I think is very valuable because it's dynamic as you use it. If I look at this cycle trough right over here and look at the first cycle using this, it's a linear regression channel. If I go from trough to trough, you can see the condition of that first half of the cycle right there. Looks very clear. It's quite positive. If I go to the next trough here, you can actually see as this turns downward, and it gives you the sense that, well, until you get to the bottom of that next cycle, that's negative. And it would give you a good reason to believe that you can actually trade the short side there. And of course, when you look at the slim ribbon PO on the bottom, it's actually red during that period, red to neutral right over there. Let's look at the next cycle. Let's go from trough to trough right here as we look at the minor cycle right there, and it looks positive. And you can see right over here as it dynamically begins to turn down to that next trough that's showing us right here. And there's that declining phase right over there, very visible. So this is actually stuff that it's very advanced teaching, but I wanted to show you this because it gives you such a great sense for how to use some of these other tools in a way to really understand market conditions. And you could see in here while the slim ribbon PO turned negative during that period right over there. Let's look at that next daily cycle right in here. It was really strong. It's hard to identify that trough. I don't really see a good one. Probably is right here, and you can see it points up. Now, I showed on the daily chart, let's go back here, that this was a swamped area right over there where the market could hardly fall. Let's go back here to that minor low, and you could see this thing never really turned down. It was just really sideways the whole way until you got to the trough. So there's that upward and downward pressure meeting with each other. Now, where are we right now? Well, I'm going to add a little more time on here. I'm going to change the right expansion to about 35. And move this over. Why didn't that change? There it is right there. So you can see in here that there's this minor cycle right in here that is likely to bring you some kind of a pullback. Let's look for where this trough is right around here. And you could see this is still moving to the upside. And based on everything I'm showing you here, as I'll just zoom in on this last one. Whoops, I blew that. Let me see if I can get that correct. Right in here, that's showing you that, the slim ribbon PO is giving you resumption signals. Your linear regression channel is still pointing up, and everything is saying it's okay. Now, once you get a designation of this low in here, if it happens to be, below the last cycle low, which is right over here, then you'll know that there's a breakdown and that the market is weak, and this will be turning down already. In the meantime, this is telling you there's no reason to be short yet, because on top of the indicators that we're looking at, this linear regression, which it gives you a channel set up, I believe it's a 1 standard deviation, is telling you that the sum of all the data from this cycle low to where we are right now is to the upside. That's what this all looks at. And this, you can see, is just a phenomenal way to be looking at the market conditions based cyclically on this 2-hour chart, which has the daily information put over it. So I wanted to do that type of analysis, that type of teaching, because I want to show you that you can get a sense for when the market's actually turning over through an assortment of tools. Our Slim Ribbon PO on the bottom will turn red. It will tell you when it's negative in there. You will get the OBI over here turning red or going neutral, as it did right over here. You can't see the yellow. It's a little hard to see, before the market then turned negative right over here and gave you that big decline. So these tools really help you with that. And again, there's a decline due into November or December, but nothing yet is telling us that the time for that is now. The time for that is soon, based on what we're looking at, but we don't want to jump the gun, because what will happen is that you will burn your emotional capital. If you do so, you'll lose money. You won't be able to pull the trigger easily when that time does come. And what we want to do is stay really strong. I used this analogy back a few weeks ago. I know Matt loved it. And that is, you want to be that, lion that's in the tall grass, waiting to pounce on the prey when the time is right to do it, so you don't miss that prey. Because if you get up too soon, if the lion gets up too soon, then the prey gets scared and runs away. Let's be very, very stealthy and wait for the right moment to get on what we think is going to be a big decline. Don't burn your capital. Don't burn your emotional capital. Either one of those. That's it. If you're new to askSlim, take our level 1 special, start learning from this team of pros. What stuff we brought today was just incomprehensible. Nobody else is going to bring you anything like we did. And we have this huge, broad content with education and analysis for traders and investors. Team, come on back. I'm tired.
Thank you, everybody, for participating. It was great to see you all.
Great job, Slim. Team.
All right. Thanks.
Yeah,
Good
this
job.
was like an AP course, Slim, today. Holy cow.
I love all those tools.
Yeah, fantastic. All right.
Excellent.
Thanks, everybody. And we'll be live again with you in a couple of weeks.
All right.
Okay.
Bye.
Bye.